Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. You can post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @DougPless. I do have one brief announcement. Excuse me. Bookmap is announcing a new Trader Desk competition. This begins April 1st, so next week, and it goes through May 3rd. So what you need to do is take a photo of your trading desk featuring Bookmap, share it on X, LinkedIn, or Instagram with the hashtag BookmapDesk, and you can win $1,000 US dollars, 1 year of Global Plus with data, and a professional photography session with of them at their desk. All right, so you can scan the QR code for more information. All right, so pretty nice prizes there. All right, for those of you who see my webinars before, please bear with me. I want to go through this. I want to make sure everyone understands my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. That certainly applies to large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the S futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of the trades and the hedgers build exposure with the S futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of the trades and the hedge their dealt exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading versus planning, and I use positional analysis. I'll look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube field questions and comments. Please feel free to post. I'll do my best to answer your questions. Hello, Stephen. Welcome. Glad you're here. Hello, Terzog. Welcome. Glad you're here as well. Here's my agenda for today, Friday, March 27th. First of all, I want to go over news items, economic data, and events for today. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. Then I'll take a look at the live market. And when I get to live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. Hello, Bull Hugger. Welcome. Glad you're here and welcome to the channel. Don't believe I've seen you before. All right, let's get started. News items. So Michigan consumer sentiment came out at 10 a.m. today. So this week was very light in terms of economic data. Of course, very active in geopolitical events and news. But the consumer sentiment came out at 10 a.m. Let's take a look at the S&P 500. This is the ES futures and Bookmap. So the consumer sentiment came out a little bit less than expected, less than previous, but not really much of a factor with the geopolitical events going on, the war in Iran. All right, so this is the S&P 500, ES futures and Bookmap. So let's move on to positional analysis now. Take a look at this chart. It looks like ES started to roll over just after 2 a.m. today and has continued that downtrend now. And there was recent news that just came out a little while ago about the House has rejected the Senate bill to fund the government, DHS. So that might have caused this last leg down toward the lower weekly expected move for ES. All right, so let's take a quick look at some key levels that S&P 500 has broken through today, basically. So here's the 6,500, SPX 6,500 put wall. Break down below that. Then here's the JP Morgan long put and the JP Morgan collar that expires on the end of the month, next Tuesday, 31st. So there was a little bit of consolidation at that level. Again, that was before the cash open. And a breakdown below the SPY 640 absolute gamma strike put wall. A breakdown below the ES lower daily expected move. And then this level held as support for quite a while. That is the Spotgamma 6406, SPX 6406, implied one-day move low. Now, next level down is the ES lower weekly expected move. All right, so let's take a look at the source of some of these levels. So let's step back. Let's take a look at our higher time frame. Let's start with SPX, the underlying index. Let's go to a one-year, one-day chart for SPX. Rally began last year in April. Intraday high, January 28th. Just a little bit over 7,000. And now SPX is trading down below 6,400. And it has undercut most recent lows, October, November. All right, so let's take a look at a shorter time frame now. Let's go to a 30-day, 1-hour chart so we can focus on the more recent price action. All right, so this is the, again, SPX. 30-day, 1-hour chart in Thinkorswim. This is a linear regression channel. This is not hand-drawn. This is automatically generated by Thinkorswim. And note, the last time that we met, SPX was trading right around the midpoint in between the low and the high of the linear regression channel, and is now actually trading down below the lower end of the range. So this big drop began on Thursday, gap down on Thursday, drop down, and then now continues today. So SPX trading down below its lower daily expected move, heading towards its lower weekly expected move. So let's take a look at the expected moves. These are shown by the dashed purple lines. They're based on the options market, based on the closing price for SPX from last Friday. Those levels remain in place for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday. So those levels do change every day, and I post the expected moves every day for SPX, ES, and NQ. in the options-jug chat channel of Bookmap Discord. All right, so SPX now trading down below its lower daily expected move, which was for today plus or minus about 74.5 points. So 74 plus or minus 74.4 for SPX. And SPX trading down below that level. Nobody wants to go home long this weekend. And I did discuss the expected moves in a little bit more detail in my Wednesday webinar. If you have some questions about expected moves, you can watch that on the Bookmap YouTube channel. All right, let's take a look at the other levels on this chart. And I'm going to focus on the Spotgamma levels. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers on a variety of trading platforms. Again, this is Thinkorswim 30-day 1-hour chart. I'm going to start with a put wall at 6,500. That is the strike with large net negative gamma that can be expected to act as support. And note, I showed how SPX, or ES really, traded down below that level in overnight hours. So SPX only trades during regular trading hours. So SPX, by the time it opened, was trading well down below that level. So SPX gapped down below the 6,500 put wall. All right, the next level up is the volatility trigger at 67.25. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. Note that is based on Spotgamma's older total open interest model. And we'll take a look at a view of gamma based on their newer synthetic open interest model in just a couple of minutes. In that level, the volatility trigger did move up compared to yesterday. And then finally, the call wall and absolute gamma strike are both at 7,000. So the absolute gamma strike is the strike with large absolute positive and negative gamma. So that's where most of the gamma-weighted open interest is concentrated. Then the call wall is the strike with large net positive gamma that can be expected to act as resistance. And certainly the volatility trigger, call wall, and absolute gamma strike are not in play anytime soon. And by the way, the call wall did move down yesterday to 7,000 from 7,100, and it remains at that level today. All right, so again, the only shift in level was the volatility trigger that shifted higher. And I would not be surprised at all if one or more of the levels shifted down for Monday. All right, so far, SPX down lows of the day, trading down below the lower daily expected move, but still above the lower weekly expected move. All right, let's wrap up our view of SPX with a 1-minute chart. So we can take a look at the last 5 days, actually starting last Friday. So this is the last few days worth of price action. Dark shading showing regular trading hours. So this is the Friday low. And that was the low on Thursday. And that was right around 67.45. So that was the low on Thursday. So here's the big drop on Thursday. Continues today. So gap down for SPX today. Chopping up and down around this combo 4 level. Finally finding a resistance at that level. So let's zoom in on this. All right, downtrend began yesterday afternoon. Gap down today. And now trading down toward lows of the day. And Master Chief, welcome, glad you're here. Ask, when you say call wall change down, does that mean institutions are hedging with calls at lower strikes? So it's possible. So that's a strike with large net positive gamma. So traders are selling calls at that level. Market makers are buying calls, hence the positive gamma. So that definitely could be the case, that they are selling calls at a lower level now. So anytime one of these key daily levels shifts lower, the way I look at that is that traders are looking for and accepting lower prices. So yes, Master Chief, that's a good assumption. Yes. All right, so that's SPX. Let's take a quick look at SPY. And by the way, most of the levels are all above, as we talked about. Put wall up to the call wall, all well above current price. Let's take a look at SPY, the other underlying index component. Let's zoom in on this. All right, so this morning, quite a bit of chop. Good bit of around this 640 level. That is the SPY put wall absolute gamma strike. By the way, this set up a good long scalp just a couple minutes after the open. A lot of chop around that level, then most recently around that level acting as resistance. So the setups that I'll talk about in my setup review is this long that I just mentioned at the put wall, and then a short after that. And of course, it looks like the best trade for the day is just to remain short. Right around 11:30 there. Enter again. So we'll take a look at all that in just a couple of minutes. All right, so that's SPY. All right, back to Bookmap. Again, I mentioned all the levels that S&P 500 has sliced through today. SPX, 6,500 put wall. JP Morgan, long put of the JP Morgan collar. So that's a put spread. So JP Morgan is, like Master Chief mentioned, short a call. They use that to help pay for a put spread. Long put at 64.75. I'm not sure where the short put is. So they're making money on their put spread that they paid for with a short call. Again, all that expires next Tuesday, end of month. So JP Morgan is losing money on their long stock portfolio, but making money on their hedge now. All right, so ES down to its lower weekly expected move. Again, there's that 640 level. Spotgamma implied one-day move low. 6,400 level, that was a positive gamma. Then the ES lower weekly expected move, and still moving lower. We'll talk about setups in just a couple of minutes. All right, by the way, there is a difference in price between ES and SPX, and today it is right around 44 points, somewhere between 43 and 44. I'm using 44. So here's the 64.50 level. That's SPX 64.50. I'm showing that at ES 64.94. And I do post the index relationships that I use every day in Discord, in the Options-Jug chat channel. All right, let's take a look at NASDAQ. Zoom in on this when we get back to it. Take a look at NASDAQ. NASDAQ also began to roll over. That's right around just before 2:30. Making new lows. Trading down well below the QQQ 570 put wall. And also the NQ lower daily expected to move. Then this purple line here, it's hard to see. just above the red line, just above the NQ 23,600. That's a lower weekly expected move. And NQ trading well below both of those levels. All right, so let's step back. Let's take a look at the underlying index charts. Index components. We'll start with QQQ. All right, so these are the lowest Spotgamma levels. Let me zoom in on this. All the Spotgamma levels are above. This is the lowest level. The 570 put wall. That's the lowest Spotgamma level. And QQQ downtrend continues, making new lows. Let's take a look at the other underlying index component. Marianne Gramada, welcome, glad you're here. Yes, JP Morgan long put is public information. So that's how I know it. And that, yeah, it's public information, so everybody knows about it. All right, NDX. I think there is one level for NDX down below at 23,000. Here's this combo level, 23,445. Combo 1 level, important combo level, acting as resistance. All right, back to Bookmap. So we've identified a couple of key levels. There's the QQQ level, 570. And this combo level that I mentioned, NDX combo level, is in this cluster as well. And then again, the lower weekly expected move. All right, NDX continues to move lower. So we'll take a look at setups in just a couple of minutes. So far from the high of the session at 23,950, NQ is down about 600 points. All right, let's wrap up our positional analysis by taking a look at Gamma. So this will give us an idea of the potential volatility for the day and support and resistance levels. All right, so this is the Spotgamma Trace Gamma heat map. This is showing market maker's Gamma position for SPX. Red shading indicates negative Gamma. Remember, in negative Gamma, we're looking for higher volatility. And then blue shading indicates positive Gamma. And in positive Gamma, we're looking for lower volatility. All right, so we see red shading up above and some blue shading down below, showing positive Gamma down below, right around 6,300 to 6,350. And some positive Gamma actually right over here, 6,385. 6,400 and 6,425, but mostly between 6,400 and 6,385. Let's step back in time. So this is the Trace Gamma heat map. It's updated every 10 minutes. So the levels that we took a look at on the charts, on the NQ and ES charts, are based on open interest. They're updated once a day. So those levels remain in place for the entire day. Then this information is updated every 10 minutes. So it is, again, market maker's Gamma position, which is changing during the day. The GEX bar is over on the left. So remember, we have the Spotgamma implied one-day move low at 6,406, and then positive Gamma at 6,400, acting as support. This is, we'll go back to noon. This is 12 p.m. So far those levels acting as support. Test it again, 1240. And then finally, breaking through at right around 120. I guess that could have been when the news about the House came out and their rejection of the Senate bill. All right, so now new positive gamma forming, traders selling puts at 63.85. And that level potentially acting as support. So that would be around 64, ES 64.29. So let's go back, let's take a look at ES. So ES is trading right down to that level now and still looks like it wants to move lower. All right, and Marianne Gramada asks, sorry about the pronunciation if that's incorrect. So I like to look at all. So I want to look at everything. So it's based on all DTE. So I can switch to 0 DTE. So most of this is going to be 0 DTE, but I prefer to just look at everything to get the most information possible. All right, so let's move on now. So we're looking for, again, quite a bit of movement in this negative gamma up above, and then potential support down around right now 63.85 to 6,400. But it looks like traders are continuing to take negative delta options positions. This is Hero right here, this purple line, showing traders taking negative delta options positions. So let's move on now. Let's take a look at and see what options traders are doing. So I mentioned the Hero signal. Hero stands for Hedging Impact Real-Time Options. It is available to Spotgamma subscribers. And this is let me refresh this. All right, so this is the Hero signal for the S&P 500 index components. We've already taken a look at a couple of those, SPY and SPX. And it is also includes ES and XSP. So the white line is price for SPX. The purple line is the Hero signal. And a rising Hero signal indicates traders are taking positive delta options positions. They're buying calls and or selling puts. And then a falling Hero signal indicates traders are taking negative delta options positions. They're buying puts and selling calls and or selling calls. And in both cases, market makers take the opposite side of the trades and they hedge their delta exposure with ES futures. All right, so again, this is the S&P 500 index signal. And let's zoom in on this. Stephen asking about Circle. Yeah, we can take a look at Circle. It is on the move today, trading down. It was earlier with Coinbase and other crypto-related stocks. So I actually wanted to take a look at Coin, but we could take a look at Circle too. You know, it's a stable coin. They have something to do with stablecoin. I don't know the details of exactly what Circle does. So we'll get to that. All right, so let's focus on the S&P 500 right now. So the first setup that I want to talk about is this countertrend scalp. So the first thing we know is this flow alert came in. This is right around 937. Flow alerts can often indicate a potential reversal in hedging flow. In this case, from negative delta to positive delta. That's exactly what happened. So we're looking at Hero. We see this flow alert. Now let's go to Bookmap. So when I see this flow alert, it gets my attention. Let's zoom in. And I'm going to zoom in to a pretty narrow window here. All right, so once I see the flow alert, I'm looking at levels, and I want to see a potential level for reversal. And lo and behold, you can't see the level there, but that's the SPY 640 absolute gamma strike put wall. That's a level that I expect to act as support. Heat map in Bookmap is showing some buyers just below that level, limit buy orders in the order book. And the volume dots show market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots more buyers than sellers. It looks like to me sellers are exhausted. More green volume dots coming in as the hero signal shifts higher. Support at a level that I expect to act as support, especially after such a large move down. And that's good for about 20 points up to the SPX 6450 level. So about 20 ES or SPX points, or 2 or so SPY points. And Jalil, welcome, glad you're here. Ask the flow alert, how can we know if this alert indicates bullish or bearish activity is happening? Well, there's no way to know that for sure. But so once I see the alert, again, I'm on alert, looking for potential reversal. That would be my first thought. Again, after such a large move down. So now I'm watching Bookmap. All right, so I see a level that can act as support. Rising light blue line. Large traders have been fading that move with iceberg orders, so they have been buying weakness with iceberg orders. I see the green volume dots start to come in, and I think it's a pretty high probability trade to get long for a scalp at that point. And then watching Hero, I see the Hero signal reverse higher. Put wall act as support temporarily. So that lasted about 20 minutes, less than 20 minutes. Cumulative volume delta starts to move higher, shown by the magenta line there. In a good counter-trend scalp for about 20 points, following the steps, watching the Hero flow alert, Hero signal reverse from slightly negative delta to positive delta, aggressive buyers start to come in, and price moves higher. All right, so again, Julia, you don't know for sure, but you assume that this level is going to act as support. That Hero flow alert, again, gets your attention, and you're watching Bookmap and Hero, and you see the reversal higher. All right, so let's go back to Hero now. All right, so again, that was more of just a counter trend scalp. And then the next setup was a short here. So the Hero signal starts to flatten out. The shift to puts and calls. Orange line shows calls. Blue line shows puts. Rising blue line indicates traders are selling puts. That's positive delta. Rising orange line indicates traders are buying calls. Again, positive delta. So traders stop selling puts. So the blue line is already shifting down. Traders start buying puts. And then when traders stop buying calls and start selling calls, price reverses lower. So that's the next setup. The short. Cumulative volume delta turns lower. Buyers are exhausted. More magenta volume dots come in. And back to the downtrend. ES reverses lower. Right below the SPX 6450 level. And again resumes the downtrend. Breaks down below the put wall. And of course the overall move is a downtrend today. All right, so those were just a couple of setups from this morning. All right, let's take a look at, let's take a look at one other thing. Let's go back to Hero. All right, so we were taking a look at the S&P 500 index Hero signal. There's also an S&P 500 equity signal. This shows options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. So typically the S&P 500 index signal is a little bit more noisy, and it can show the turning points a little bit more clearly. And typically, but not every day, this S&P 500 equity signal shows the overall trend. And in this case, they're definitely in agreement after about 11:37 here, when traders start aggressively buying puts. Call buyers take the foot off the gas. That's the S&P 500 equity signal. And then again around that same time, traders start buying puts. They stop selling puts, start buying puts, stop buying calls, start selling calls. Right now we have bullish momentum to the downside, with both the blue line and orange line move in the same direction. And this, I mean bearish momentum. Bearish momentum to the downside. Traders buying puts, selling calls. Let's take a quick look at this. Turn around the 948, 950, turn around. You can see the peaks in both the put line and the orange line as S&P 500 rolls over again. And again, the best entry point for the day, if you were patient, waiting till about 11:30 for the short. All right, so that's the S&P 500. Let's take a look at NASDAQ. So again, just like the S&P 500, for NASDAQ, there are two hero signals that we can take a look at. This is the NASDAQ index signal, showing options trades and market maker hedging activity. For the index components, we've already taken a look at those, QQQ and NDX. And we'll take a look at the MAG 7 signal in just a minute. All right, so this is showing this 950 setup. Looks like an institutional kickoff there. Large block order. Buying puts, shown by the following blue line. Retail traders join. Buying puts. Call line rolls over. And NASDAQ rolls over just before 950. Go to Bookmap. NASDAQ continues to move lower. So there's that short at 950. A little bit lower high, breakdown below the 570. Large gamma 2 put wall. Again, magenta volume dots come in. Aggressive sellers, buyers are exhausted. All right, any questions about the indexes? So let's go back to Hero. So in ES, I talked about one brief, pretty clear counter trend long, but mostly short entries, of course, have been working today. So there's the NASDAQ signal. We can also look at the Mag 7 signal, which is showing options trades and market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, Tesla. And the S&P 500 equity signal is essentially the Mag 7 plus 493. So we see the same shape and pattern as the S&P 500 equities. Peaks right at that short entry, 950. And then the big rollover right around 1130. Bearish momentum. Blue line, orange line moving the same direction down. And the white line here is price for QQQ, and the white line here is price for NDX. All right, any questions about the indexes? All right, let's take a look at some stocks. So I have a couple of Mag 7 stocks to take a look at, and then one other stock that was strong this morning, and then a couple of commodity stocks, silver and USO, and then a crypto-related stock, and we can take a look at Circle as well. All right, so let's start with the Mag 7 stocks. Amazon, let's zoom in on this. All right, key here for today was the breakdown below the 205 hedge wall. So this was a bearish opening drive, primarily driven by call sellers, down to the 200 put wall. It took a while to reach that level. Actually, it made me, let's see if Amazon has made it down to that level. No, Amazon's still hovering just above its 200 put wall. Consolidation as the call sellers and put buyers have taken the foot off the gas. So now some call buyers have come in. So we know bearish opening drive to consolidation just above the 200 put wall. So let's go take a look at Bookmap. Go to Amazon. Bearish opening drive. Break down below the 205 hedge wall. Good entry point for short. And then Amazon still hovering above the 200 put wall. And those are limit buy orders. So the heat map of Bookmap is showing a history of limit orders in the order book. And that was definitely the primary target. And it looks like there's certainly a potential for Amazon to reach that level, just about 0.34 points below. Note all the green volume dots, rising cumulative volume delta, good indication that options traders are driving price today and not aggressive buyers, stock buyers, share buyers. All right, so that's Amazon. Bearish opening drive to consolidation, right above the 200 put wall. All right, next stock, Meta. So the Meta puke continues. Not sure what it is. Meta has been quite weak. And that was really driven, I guess, maybe a nail in the coffin yesterday or the last couple of days when news came about, was announced about lawsuits involving Meta, and Meta lost lawsuits, I think a couple of lawsuits regarding the influence of social media. So Meta, the puke continues. High liquidity targets, and I did post a short setup for Meta yesterday in Discord, and it looks like it's just continuing it today. Limit orders in the order book, acting as magnets of price. Those are limit buy orders, mostly at the zeros and the fives. 520, next level down below. So it looks like a little bit of an absorption of that level so far. So those buy orders at 520 remain in place. So let's see what options traders are doing. All right, back to Hero, back to Meta. All right, so the move down, initially driven by call sellers, shown by the following orange line. When traders sell calls, market makers buy the calls, and they have to sell stock to hedge their delta exposure. Shown by the following orange line, traders sell calls, flow alert comes in, signals significant options activity. In this case, it was more a continuation. Although it looks like maybe 535 did act as support for a few minutes. Let's go back to Bookmap. So 536 acted as support for just a few minutes. Then price broke down below the liquidity at 535. Back to Hero. And traders, it looks like just in the last few minutes, have stopped selling calls and buying puts. Maybe Meta will consolidate. All right, so again, the Meta puke continues. All right, next stock I want to take a look at is Micron. So Micron, one of the memory and storage stocks that have been very strong this year, showing some weakness in the last few days, and it looks like dip buyers are coming in today. So let's zoom in. Bullish opening drive. Rising blue line shows put sellers taking advantage of higher volatility. Call buyers come in. Multiple flow alerts. They're shown on the call line, but they really apply to both the puts and calls. So about a 20-minute bullish opening drive, period of consolidation for about 50 minutes. Then the call buyers start to come in, put sellers, and Micron moves higher. And then finally, right around 11:30, the call buyers and put sellers took the foot off the gas. Micron consolidating. Now it looks like, as Micron started to drop lower, some put buyers came in. Let's check. Let's see if this is next expiry or longer term. All right, so the orange and dark blue lines show all trades, all expirations. That's options that expire today, next week, next month. And then the green line shows calls that expire today. And this light blue line shows puts that are expired today. So it looks like most of the trade is longer term. So longer term than options that expire today. So this was a longer term put trade. Large. Looks like several large institutional orders driving the put line from right around positive 105 million delta notional to down to minus 140 million delta notional in just a few quick minutes. All right, let's take a look at a Bookmap. Go to Micron. The really bullish move higher that began before the cash open. So this is just after 7 a.m. Whoops. 7 a.m. Buyers start to come in. Continue after the cash open as the options traders come in. Put sellers, call buyers. Deeper pullbacks. Let's zoom in. And I use this market pulse price change indicator to help me identify the deeper pullbacks that are good for long entry. In an uptrend, looking at the dark red there. Liquidity targets up above. Let's go back and let's check Hero again. So Hero, call buyers, put sellers, took the foot off the gas right around 11:30. And that was the high of the day for Micron. So Micron, we have call buyers, put sellers, and aggressive buyers buying shares. And then that stops right around 11:30 or so. Now Micron consolidating, moving slightly lower. Well, let's take a look at a couple of commodity stocks. We'll start with silver. All right, silver made a very nice move right after the, actually starting about 9, but continuing higher at the cash open. Let's see what options traders are doing. So let's take a look at silver. Zoom in on this just a little bit. So it looks like price was already grinding higher. Few put sellers, and then that accelerated. Or actually, you could say call buyers came in, joined the party. Traders were all selling puts, helping to drive price higher. Put sellers, call buyers joined the party, also aggressive buyers. And then call buyers take the foot off the gas just before 11:30. And then put sellers become put buyers, more institutional block orders starting around 12:15, and silver's consolidating, but it did break out above the 62.50 hedge wall. So here's the 62.50 hedge wall. So initial resistance at that level, then breakout above that level for a sharp move higher. So that silver looks like starting to move higher again. All right, back to Hero. All right, let's check oil. We'll look at the USO ETF. Bullish opening drive. Put sellers, call buyers, driving price higher. Oil still continues to move higher, and not good for equities. All right, so back to Bookmap. USO on the move today, much higher. This move began before the cash open. Looks like my data here in with DX feed begins at the beginning of the day, just after 12 p.m. And oil continues higher from right around 116.50 as the day began up to 125 now. High liquidity targets, 123, 124, 125. Limit sell orders in the order book. Let's go check Hero. All right, Hero showing put sellers, a little bit more consistent than the call buyers. Call buyers helping to drive these legs higher. So now it looks like the put sellers have taken their foot off the gas and the call buyers have come in. Well, let's check on crypto stocks. Any questions? So I had Coinbase here. Bearish opening drive to consolidation. So trade down to the put wall at 160. Zoom in. Traders sell calls, buy puts. Market makers take the opposite side of the trades, and they have to sell stock to hedge their delta exposure. So move down to the 160 put wall, then consolidation. Now I don't have Coinbase in Bookmap. I ran out of room in Bookmap, but there's the trade in Coinbase. Stephen mentioned Circle, stablecoin company. Whoops. Looks like some put sellers have come in pretty early. Circle did move lower. So net for the day, even though Circle moved lower, put sellers and call buyers have come in, shown by the positive delta notional. Are any questions? Anyone have any stocks they want me to take a look at? Let's go back to the equities. S&P 500. Slowing down just a little bit. Back to ES. All right, so remember that positive gamma that we were looking at 63.85, which would be right around ES 64.29. Looks like ES is a little bit below that. So let's go check. Let's check trace. So there's the positive gamma at 63.85. SPX trading below that, 4 points below 63.81. Next gamma level down below 63.60. So that would be quite a bit. Mariana wants to take a look at Microsoft. Sure, let's take a look at Microsoft, and then Terzog, I'll get to answer your question. I'll get to your question. All right, so Microsoft, another one of the Mag 7 stocks. Bearish opening drive. Looks like it had recovered. Let's shift to puts and calls. So traders started selling puts right around 950. Call buyers came in. Bullish momentum. Sorry about that auto zoom. Get back to Microsoft. Bullish momentum just before 10:15. Traders are already selling puts, buying calls. Let's go take a look at Microsoft. Check this reversal. Let me tone down the volume dots. So bearish opening drive and then reversal. And now moving down lower again. All right, back to Hero. Call sellers, again, bearish opening drive. Full alert comes in just a minute or two after the cash open. Get your attention. Put sellers start to come in. So at that point, you start to look for a potential reversal. And that happens when the call traders start selling calls, start buying calls. Price moves higher. All right, so that's Microsoft. All right, back to S&P 500. All right, so it looks like some call buyers are coming in. But net for the day, it looks like put buyers are in control. All right, so Terzog asked, what is your favorite option strategy to play in this high volatility, bearish momentum? Do you trade the inverse? So what I like to trade is spreads. So let's go back to Bookmap. Go back to ES. Let me tone down the volume dots. So my preference is to trade, let's see, something like, let's go to the SPX 1 minute chart. Zoom back out. So my preference is to trade something like this. Look for high of the day and sell a call spread. And that would be earlier in the day that I'd want to do that. Sell a call spread. As price moves in my direction, I can spread that off and have a risk-free trade, and then I can do it again, especially on a day like this. Sell a call spread, spread it off, sell another one, sell another one. Then you have multiple risk-free butterflies in case price moves back up. So sell a call spread, or you could buy a put spread. I prefer a call spread. So as price moves down, those calls are out of the money. I don't worry about them. So for trading options, that's what I prefer. All right, so it looks like now some buyers are coming in to ES. Cumulative volume delta has been rising. As price has been moving down, some aggressive buyers starting to come in. Also note the light blue line showing large traders are buying this move with iceberg orders. Let's take one last look at Hero. Let's go back to puts a total signal. So still total signal is down. Traders are buying puts and selling calls. Looks like put buyers a little bit more aggressive. All right, everyone. And Marianne asked how many trades you make during the session. It varies. Depends on how busy I am. So I may be managing longer term positions or preparing for my webinar. So it all depends. All right, Terzog, you're welcome. Have a great weekend yourself. Thank you. All right, everyone. Thank you very much for watching. Thanks for your questions and comments. Have a great afternoon. Have a great weekend. And I will see you on Monday. And we'll talk about the developments over the weekend on Monday. All right, everyone. Have a great weekend. And I will see you on Monday. Bye.